The big boom is going to come when the financial system starts to hit the skids and people realize the normal safety alternatives they have are not going to be there. And as they roll out the central bank digital currencies, a lot of people aren't going to accept that. And I think you're going to see people rush into the metals. A large part of the population is going to go to metals. And I actually think at that point, the government's going to panic a little bit and say, oh no, we've got an issue. Expect a lot of volatility in the precious metals going forward. We could easily see $100, $200 a day movements up and down and go back and forth. And we could see, $4, $5, $6 in silver. And the key thing is don't get shaken on that.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for November 15th through 22nd, 2022, while supplies last. This week we have a Queen Elizabeth special, 2 coins bearing the portrait of the late monarch. First, we have a silver Britannia at only $8 over spot, while the Royal Mint has already started minting King Charles commemorative coins. They made the unexpected decision that this first run of 2023 Britannia would still have the portrait of Queen Elizabeth II. Our second special this week is silver maples. We secured a shipment of backdated silver maples, including full mint-sealed monster boxes from years prior to 2022, and they are available at $8 over spot as well. The silver maple, made by the Royal Canadian Mint, is 4/9 fine and was the first bullion coin minted to that exemplary purity. They are one of the most recognized bullion coins in the world. Both our specials this week, the Silver Britannia and the Silver Maple, are $8 over spot while supplies last. They come in tubes of 25 and boxes of 500 and are IRA eligible. If you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. Our number for all orders is 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Robert Kientz from GoldSilverPros. Rob, thank you so much for joining us today.
Hey Elijah, thank you for having me on.
Well, it's great to have you. And I was wanting to report on the digital dollar that we just heard news of a couple days ago. Now, people have been expecting this. The Federal Reserve has been talking about this. Other countries have been testing digital central bank currencies. Your perspective on what this means? It sounds like they're going to be rolling out a test for, it seems like half a dozen or more large banks are going to be testing this digital dollar. What does this mean? Is this good news? Is this bad news? How should people be looking at this right now?
That's a really good topic to talk about. Is it good or is it not good? And I think what is good and not good could be in the eye of the beholder. I think if you're the central bank, you love it because what this currency is going to allow it to do, and the central bank and government in collaboration with each other in terms of issuing the money, they want to issue money without constraints and limits, but they also want to, the technocrats in the financial system want to be able to use a system to control aggregate monetary flow. So if you look at modern monetary theory, its roots in Keynesianism, and essentially that whole thought on economics is it's a macroeconomic focus perspective, and it's central planned. Central planners focus on macro because their objective is to control the flow of money in society, and they want a monetary system that won't break. And a lot of previous fiat monetary systems broke. And why did they break? Because what always happens is in that debt-based system, you get to a point at which you have more debt than currency, and you can't service the debt with the currency created. It's a 9-to-1 system. And even if you look at money market funds and things like that, it even is more fractional reserves. It goes beyond that. So essentially, there are limitations in the system mathematically that the fiat dollar has to collapse like other fiat currencies. That system mathematically can't perpetuate past a certain point. The way they've designed this system is that they'll have more control using 2 methods of aggregate money in the system, and therefore basically trade and commerce and all those things, which is what they want as central planners. And the 2 things that they'll have to control aggregate monetary supply are taxes, in which they can raise or lower the tax rate, which they have now, but it's much harder to manage in this environment. And then they'll also have the central bank digital currency, which at the press of a button, they can increase or decrease the amount of money. And it's not simply a matter of printing money. What's really sort of nefarious about the way they're doing it is they're implementing bail-ins into the system. So the central bank digital currency is a bail-in system. And by that, I mean, if you look at the IMF papers that were written all the way back to 2015, And I first started covering this in 2018 when I found out about it. Essentially, what they want to do is to be able to control cash levels through negative interest rates in the banking system. So we're all familiar probably with negative interest rates in the debt system in Europe in particular. I think at one point there was like 16 trillion of negative interest rate debt, meaning you took on the debt, but you had to pay for the privilege. So you actually paid a yield to take on the debt. Well, obviously people don't want to do that. And here in the United States, I don't think any of the money managers are going to buy a lot of negative interest rate debt. So they need to be able to implement negative interest rates in the system. And why negative interest rates? Because in any sort of fiat monetary system, it always gets overheated. And what they want to be able to do is use interest rates either to speed it up or slow it down. But they're going to use negative interest rates in the banking system. And this is also, Elijah, if you look at how, as they were figuring out, in 2015, IMF wrote a paper, and they're figuring out how to get rid of cash so that we can go to negative interest rates. Because they knew that the cash and bond system wouldn't allow them to go deeply negative. And this is their wording, deeply negative, to where they really pull back on the amount of money, in the economy so that they can manage an aggregate level how things are going to prevent deflationary depressions and to deflate hyperinflation, or to defeat that is what they think. So long story short, they got to get rid of cash. They got to push it out. But they know that people only accept the banking system, and they also want to marry a sovereign currency. So they're going to create a digital dollar. They're going to implement negative interest rates in the banking system so that if, for example, problems occur, they need money, they can simply decrement your bank account for how much money. And the way that this works is, say you have a direct deposit from your employer and they deposit $100 into your account. Well, before you can utilize that money, it's decremented by that negative interest rate. So say they decrement at 5%. Well, now you have $95, but they're electronic dollars. And so now you're in that system, and there's no way for you to get around that tax. It's basically a tax on your income or a tax on your labor. There's no way to get around it. And in the IMF paper, they talked about taking the lower bound as far down as they wanted, meaning they could go negative interest rates of 40% if they felt like it would help the economy. So essentially, it's a bail-in system. It's also a monetary aggregate flow control system that allows them to implement modern monetary theory. They can't do it in the current environment. They can do some things, but this system allows them to implement it. And to illustrate why it's different than, say, Bitcoin or Ethereum or these private digital currencies, those currencies, take Bitcoin, for example, I think it's 21 million limited currency supply. It's proof of work, meaning there has to be energy put in all of these things. And regardless of what you think of that system, its attributes ensure that largely it is decentralized, that it's not controllable by one power. It can't be a tool used to control aggregate monetary flows. Once the Bitcoin are issued, they're issued and they're out there. And it allows people to transact privately. In this system, it is not decentralized. It is centralized and it's federated. And the tests that are going on right now, the New York Fed Innovation Center, NYIC, and something called Project Cedar, is they're testing trading of sovereign cryptocurrencies with each other. In other words, they know that we need a digital dollar, so we marry the dollar. They know that people in Europe and European Union need a digital euro, so they marry the euro and adopt it. They know that people in China are going to need the digital yuan, so they've adopted that. So everybody's going to have their individual sovereign currencies in a federated model. And what the New York Fed right now is testing is trading those cryptos with other sovereign cryptos overseas. So it's from our version of the central bank digital currency ledger to some other country's version, and they're testing compatibility. Once they get that figured out, not only will it be the elimination of cash and cash alternatives like PayPal, Venmo, Cash App, anything that, and Bitcoin, Ethereum, anything that the private market has adopted, either as a tool to exchange money or to be an alternative currency, they're going to limit and they're going to restrict. And what they're going to do is force everybody into this system. And everybody's going to have to use it. It'll be the currency that you use to pay debts and all those things. They're going to put regulation around everything else. And that will allow them to control aggregate money supply. But what it does is it allows them to control your value, the value you have in your bank account. And it also, one other thing it does, it allows them to track everything you do. Because one of the things about the blockchain is that, yes, it's immutable, but also it records every transaction you ever do, puts it on the blockchain forever to see. It's kind of like the Wayback Machine on the internet. When you post something on the internet, archive.org takes that and puts it, into the archive. And a lot of what you post on the internet will never leave, even if you tear down your site or, what the content disappears. And that's essentially what the blockchain is. Every transaction you ever do never disappears. So if you do a transaction and then a law is created to where you did something, let's say you bought something and now it's illegal, some sort of, hemp-based product, let's use that as an example. Maybe that's made illegal. Well, if you did that transaction 2 years ago, they could go back and penalize you for that because they'll have a complete record of all your transactions. And if you marry that with what's going on in China with the social credit system, they could also restrict, because they control the currency now and the transmission of it, and there's no privacy and there's no way to use cash or any alternative. They can control whether or not you can get on a train to go to work. They can control whether or not you can pay for your internet. They can control whether or not you can pay for your electricity. They'll literally control all of those things if they want to. That system will allow it. And so it is very much different than the private cryptos. And I think what I believe happened was the government's been interested in a digital currency for a long time. In the 1990s, the NSA was asking MIT about it. On their bulletin board back then when the internet was first getting started. Bulletin boards were the way you communicated. And by the way, that posting that the NSA put is still out on MIT's bulletin board. You can still go see it. You can Google it and it'll show up. And the NSA was asking in the 90s when the internet first got started, okay, now can we create electronic money? And electronic money was created. I think it was created by the private sector. But now the governments are looked at it and said, perfect, you guys have developed this. We want to take our own version of it and use it for our digital currencies. And the politicians are like, great, but we also need to push out the original cryptocurrencies because if we do, they're going to be competitors for the digital dollar or the digital yuan. China's already banned Bitcoin. You can't use it. I think part of Korea has banned Bitcoin. So a lot of the sovereigns who have plans to have these digital currencies are banning alternatives. And I think people may not be aware that that's what's coming down the pike with central bank digital currencies. And people are going to naturally, because they've been learning about digital currencies, assume that the digital dollar, digital yuan, digital euro are the same, and they're not. They're using some concepts of the private digital cryptocurrencies, but all of the concepts around decentralization, private money, they stripped out. They basically kept the blockchain and instead put their own version of the coins on top of it, and that's what they're testing. And I don't think that this is good for people because it allows too much centralized control. I mean, we complain about the system we have now, but at least that system has some checks and balances. This system will have no checks and balances with regard to currency, control of aggregate money flows, control of your wealth, control of your spend, control of what you're able to buy, so that, let's say you have an unpopular political opinion, it also could be potentially used as a political control tool as well.
It does seem like it's pretty much exactly the opposite of what Bitcoin kind of proposes, kind of is, and what other cryptocurrencies often are. They're decentralized often. They add privacy to transactions, and they also are limited in supply. But central bank digital currencies and the digital dollar seems like it would be exactly the opposite of that. It's centralized, it's not limited in supply, and it's not private at all. I did want to ask you, what are the distinctions between the system we have right now and what it'll be with the digital dollar? Or what it could be with the digital dollar as well, because very few people actually transact in cash nowadays. It's often card, or as you mentioned, these maybe third parties like PayPal and all these different things. At the end of the day, if you're using a credit card, if you're using bank transfers and all those kinds of things, in theory, it could ultimately be tracked and the government could see that. So what is the actual distinction then from what we have now and what the system could be in the future?
Yeah, there's quite a bit to unpack there. The existing system it's an anachronism of the past. It wasn't based on technology. We didn't have the technology tools back then. But the economists for 150 years have known eventually we'll have to get negative interest rates if you want to get to aggregate monetary supply control. You can expand and contract. And Keynes, to be fair to Keynes, when he wrote his theories on money and credit, he did say governments shouldn't always expand, they should contract. Now, have any of the governments listened to that? No. They just took the expand and they kept expanding. But actually with the system, they would be able to contract. And so the technology allows them to actually enact what Keynes first envisioned. And by the way, Keynes and Irving Fisher and those very popular economists followed other economists' writings. And in the, I think the late 1870s, early 1880s, an Italian economist, Silvio Giuselli, wrote about negative interest rates. And they didn't have the tool to enact negative interest rates back then, but they knew that they would have to go to them. And I think now if they have the technology, they're simply implementing the system the economists first envisioned 150 years ago. And by economists, I don't mean classically trained economists or Austrian economists. I mean the MMT / big government economists, the macro economists who believe in centralized control and planning. And essentially what this new system is it's a way. Russia would have loved it, for example, as a tool for the communists to control their banking system. It's perfect for that. It's a centralized control tool. Some of the differences are now we have this limit of debt. Silvio Giuselli knew back in the 1800s or late 1800s, they're going to have to get rid of the debt system. And John Maynard Keynes wrote about it and said, the debt system is clunky. It doesn't work. It doesn't allow us to expand when we want to. It's too much accountability. You have to go to Congress. Now, do they raise the debt ceiling every time? Sure. But at the end, they don't even want to have to do that. They want to remove all of those impediments to just being able to, at the push of a button, at any point in time, increase or decrease the monetary supply. And also decrease so that they don't have what they have now. We see the destruction of the dollar, and it's very much a tool to allow them to decrease. Now, I think they're not going to use negative interest rates probably in the best interest of the people, because they never do. They do it in the best interest of managing the macroeconomy. But the differences are in that you point out, it's not decentralized, it's centralized. And it's controlled in a way in which you will not have privacy in your transactions. It's controlled in a way in which it forces you to use the banking system. What they're doing, if you look at what the BIS first proposed around this system after the IMF started writing about it, they came out a couple of years ago with a video I put on my channel where they're talking about a multi-tier system. So they will have a wholesale CBDC that gets issued to the commercial banks. And I think effectively they're cutting out the retail banks. I think the credit unions and a lot of the retail banks are going to go away. I think it's a consolidation of the commercial banking sector, because as you look at it, the commercial banking sector will get something called wholesale CBDC, which is basically the original highest value version of that central bank digital currency. A second tier of money is going to be retail CBDC, which the commercial banks will then deal in, obviously make money off of. Why? How do banks make money? Off of transactions. So banks are going to take the wholesale CBDC at a certain rate, and they're going to issue retail CBDC at a different rate. And that's the same part of the system, because when the Fed issues money now, they get interest income. And so it's interesting. It's basically a fee or an interest income for the banks to convert their wholesale CBDC down to retail. And it also will decrement the value of it. So you're going to have a two-tier monetary system, which will be different. You'll have the tier in which the commercials and the sovereigns operate, and then you'll have the tier at which we all operate. The tier at which we all operate is not going to have full value. So right now you have a dollar. A dollar is a dollar. Yes, it does lose power over time, lose purchasing power, but everybody's dollar is the same. Whether or not it's a dollar that Citigroup holds in their corporate account, or a dollar that I hold in my bank account, or a dollar that I'm using to pay for a coffee at 7-Eleven, a dollar is a dollar. In this new system, the wholesale CBDCs are the dollars of the kings or the commercial banks, and the peasant money is going to be the retail CBDCs, and that's going to be a difference. And you're not going to get the value through those retail CBDCs. But another reason they're doing that is to control. They realize that if retail CBDCs get a little bit out of control, they can govern it through the commercial banking system. But it's really a consolidation of power in the banking system is in the commercial banking system, not only the central banks, but the commercial banks as well, to allow them to be a part of that control and to make more money off of the issuance of money, and also to get rid of their competitors. The commercial banks don't want competitors. And what this also does, Elijah, if you think about it, a lot of our banking system emerged from sort of free market banking, and eventually it's been pushed into the central banking model. But you still have elements of banking that are very free, and they don't want that. They want to smush the tiers together. They want to consolidate power, because I believe they're moving us into a federated system of worldwide government currency in which they want to manage it together. And I actually think that the world leaders like the G20 is going to get together, and they're going to talk about the exchange rates on currencies and how much currency each sovereign has printed in this new system. And they're going to coordinate worldwide how much currency, because if you look at what's happened in the last 13, 14 years, China has actually printed almost as much money as the United States. In fact, right after 2008, 2009, they were printing at a much higher rate. So everybody is printing at different rates, and it doesn't allow the bankers to really control what's going on, because if the U.S. stops printing but China's still printing, you're still going to have inflationary issues. You're still going to have trade issues. You're going to have monetary flow issues. China could very easily export inflation back to the U.S. If China's new currency with Russia becomes more popular. And so there are those issues. And so this is actually a system in which the central banks of all countries are getting together to work together to say, okay, we've had these issues with the past system. We need to develop a system which allows us to coordinate globally. That sounds wonderful and altruistic until you realize it's the governments coordinating globally. And what that means is you can't leave the United States and get out of the system. It's a worldwide system. So wherever you go, you're going to have a social credit system. You're going to have tracking of everything that you purchase and do. And there's not going to be a way for you to get out of it. And that's another difference, is it's now becoming a worldwide currency system. Will we each have our own individual sovereign currencies and our each sovereign central banks? Yes. But through the BIS and IMF, they're all agreeing on the same system, and they're agreeing to work together. And so it really becomes a one world currency in a way, even though it won't look to people like that. The perception won't be that. Essentially, that's what it is. And using the blockchain technology, they're implementing one worldwide currency in which there's going to be a lot of collaboration between the central banks. And they know that they need to do this. I think one of the reasons is everybody wants to push out beyond the Earth into space. And I think this is one of the things that's going to facilitate the space age, is a currency which allows them to collaborate and build, out into space. And you see that with the U.S. Space Force, and you see that with China and Russia announcing they're going into space. Everybody wants to go into space. It's the next frontier. And as we move into that space age, they needed a currency which allows them to coordinate globally monetary flows, because a lot of the projects they're going to do in space are going to be collaborative as well. And so I think that's another reason why they're doing it.
No, our channel is all about being aware and prepared. So we've talked about, being aware of this central bank digital currency, the digital dollar here. Now, how do people prepare for this? Because it seems like there's going to be a loss of privacy. There's going to be, more centralization, less freedom with respect to the system. Is there a way to opt out of the system? And if not, how do people still retain, liberty and privacy in this situation?
Yeah, I've been thinking about that. I think that this is going to be state money. So if you're going to transact, you're going to have to use it in any sort of public transaction. If you go to the coffee shop, Starbucks is not going to say, yeah, we'll take gold or we'll take Bitcoin. More than likely, corporates are going to be regulated just like people are into accepting this currency. I do not think that they're going to ban or make illegal gold and silver. I do not think they're going to ban or make illegal Bitcoin, at least right now. I think Bitcoin has been a tremendous help to them in providing the technology they need. And so they want that private development in the private crypto space. I do believe that they're going to regulate the private crypto space and make it very hard for any of those private cryptos to become true alternative currencies, just like they didn't want gold and silver to come back and take on the dollar. So I do think you're going to be able to use Bitcoin. I do think you're going to be able to use gold and silver. Most people won't accept it. So yes, there will be alternatives outside the system, but you're going to have to build your own network. So going back to the history of your channel and Reluctant Preppers, going back to all the guys that said the best thing you can do for yourself is build your skills and build your networks. I think you're starting to see that prediction from a lot of the preppers come true, because you're going to be able to barter skills. You're going to be able to barter gold, silver, maybe Bitcoin, but you're going to have to build your own network to do so. It's not going to be part of the established or accepted network. So where you're interacting with a large corporate, like for daycare or to buy coffee, or the government to pay your taxes, or to pay your auto registration fees, you're going to use whatever system the state says you're going to use. But privately, you'll be able to do some things, I think, legally, but I think they're going to restrict it in many ways. They're going to restrict how and when Bitcoin can be used. And I think in gold and silver, because it's not electronic, they can't restrict its usage. I think what they're going to do is just tax it. They're going to put a tax regime around it that makes it very difficult for people to get their full value out of gold and silver. And the only thing you'll be able to do then is basically not report it. And I'm not encouraging or discouraging people to do that. You have to make your own choice there. But I think that's just the path that we're headed down. And I think the preppers in the community have seen this coming for a long time. And I think their predictions about this have been correct.
When it comes to gold and silver kind of as an alternative currency, we did see in the last couple of days, and really it's been the last couple of weeks, rise in precious metal prices. Do you think this has anything to do with this announcement, or what do you think is the reason for the rise we've seen in precious metals?
Well, from a technical and a positioning standpoint on the derivative markets, because if you look at spot prices, we always have to remind people it's not determined by physical trade, it's determined by COMEX and London and their price fixing and the trading and all that kind of stuff. Without getting into the details, that is more of a function of speculation on where the precious metals will go in the next few months. And it's basically a rolling few month bet on where the metals are going to go. It's not necessarily indicative of the demand. So as that market determines price, you can see movement up. And what's happened in both gold and silver is the bullion banks, or what I call the shark money, or they're the sharks of the market, I think. They have more data and they know more, have positioned net long silver, and they're moving long gold. And that movement to the long side has caused some upward price momentum because they hold the single biggest positions of any single group on the market. Now, you do have people that have to take the other side of the trade. And right now it's the managed money, it's the hedge funds and the financial houses who are taking the opposite side of the trade. But now that the bullion banks are moving long, I think that's an indication that they expect price to go up. And I think some people in the market notice that. And I think it's going to cause other participants to say, they're going long. They're really the sort of grandmasters of this market. Maybe we need to take that position as well. And so I think that word, as it's gotten out to certain traders, has caused an increase in the price of gold and silver. But 99.9% of people don't pay any attention to any of that. So until we reach general public awareness of why the metals are important, I don't think we're going to have that next huge big leg of the cycle. And that awareness will come when we have some sort of financial event. Now, that financial event could be the announcement of a replacement currency, but I think it'll actually occur before then, because I think the dollar will fail or start to fail. Everybody's already talking about it. You'll even have the United States government central bank saying, yeah, the system's failed, we need a replacement, and then they'll bring out the CBDCs. And I think along that path, we'll have plenty of opportunities for people to get into gold and silver. And I think along that path as well, we're going to have a lot of bank failures and failures of the debt system. So as you look at the end of the fiat currency system, what has to die, what's the flip side of the same coin of that, is the debt system. Currency is created through the issuance of debt. So as that currency and debt system fails, it's going to cause people to move into safe assets like gold and silver, because they're not going to be able to move into bonds and the dollar. Now, this is all going to go in stages. Other worldwide currencies will fail first, then the U.S. one will, and then they'll start rolling out the CBDCs. And along that way, you'll see much bigger rises in gold and silver. And I also predict there's going to be so much uncertainty in the system, because think about, people have been trained, Elijah, for 100 years, go to safety, bonds and cash. If they can't go to bonds and cash, and they can't go to Chinese yuan because it's had its problems, and they can't go to the peso, and they can't go to all these things, where do they go? They can't go to the FX spot market. Where are they going to go to arbitrage the risk? They're going to go to metal. So I think that there's going to be, this time, unlike the last few crises and recessions, this time I think there's going to be an absolute stampede into the metals. And it's going to be just a massive movement of people saying, I need something safe. And I think the wave that we're going to see of the generalists, not only buying the bullion, but buying mining stocks and anything related to the metals, is going to go absolutely nuts at some point. Because people, as we go through, it's different this time, Elijah. We're going through a currency reset and a financial system reset. And it's not just the U.S., it's the entire world. So what you're going to see people grabbing for the metals is going to be truly unprecedented. I think before then we could see rises as people reposition and some general awareness occurs. But we're seeing awareness in the commercial players. We're seeing awareness on channels like ours. But if you look at this, Elijah, you guys have probably, over 100,000 subscribers or whatever you're up to now. I have, 50,000 across my social media. Even if we took this video and put it on all of the alternative media, we may be lucky if we reach, 1 million, 2 million viewers, maybe a little bit more than that. Well, we have 370, whatever the number is, million people, according to the latest census in the United States. And we have almost 8 billion people in the world. So to reach that level of awareness takes time. So a lot of us are aware. But what we need to do is be an army of reporters and go out and tell our friends and family and use that network effect. And then as more people know, then you'll get that rise in precious metals. But I've said this many times the last couple of years, the big boom is going to come when the financial system starts to hit the skids and people realize the normal safety alternatives they have are not going to be there. And as they roll out the central bank digital currencies, a lot of people aren't going to accept that. And I think you're going to see people rush into the metals. A large part of the population is going to go to metals. And I actually think at that point, the government's going to panic a little bit and say, oh no, we've got an issue. And I think that's when the penalties on owning precious metals in the forms of taxes and other restrictions is going to come. When the big movement comes in, then the government's going to try to restrict. At that point, I don't think it's going to matter, because if people are moving a lot of their wealth in the precious metals, I think a lot of people are going to voluntarily not adhere to some of those government guidelines on taxes, because they're not going to have a choice. If they need to pay daycare and buy food, they're not going to be able to afford to pay those taxes, and they're going to be panicked about what's going on in the system. And I think all of that's coming. And I think the last point I want to make is expect a lot of volatility in the precious metals going forward. We could easily see $100, $200 a day movements up and down and go back and forth. And we could see, $4, $5, $6 in silver. And the key thing is, don't get shaken on that, because what that will be is the market figuring out where to go. And that period of time will be highly volatile and scary for a lot of people. But it's happening for a good reason, because the market's trying to figure out where to go. And I think people will go there. So lots of volatility ahead, lots of uncertainty ahead. I think at some point the mainstream financial media is going to freak out about what's going on, and it's going to cause a lot of panicked feelings. And just remember, come back to the alternative media, watch this channel, watch my channel. We're going to guide you through the process. Don't panic. Don't give up your precious metals. Hold them through that time. And then on the other side, you'll be one of the few that has those alternative options. And I actually think you'll have a lot of buying power then as well. I think you'll have incredible purchasing power with your metals, and it'll offer you an advantage. And it'll be not only for your own financial well-being, but also helping out your neighbors and friends and family who maybe didn't get in on time. And I think that period to get in is shrinking, and I think people want to do it now.
All right. Well, for those who are interested in learning more of your work, they can go to GoldSilverPros.com and also the Gold Silver Pros YouTube channel. We'll put the links in the description of this video. Any last thoughts before I let you go, Rob?
Yeah, I would say we're going through unprecedented times. Chinese often say, may you live in interesting times. It's definitely interesting times. The key is going to be control of your own thoughts and what you put into your mind, what type of information you put into your mind. So just be very cognizant of a lot of disinformation that's going to come out. And the disinformation will come from confused people that mean well. It'll come from your family. It'll come from authoritative sources. But just remember what you've learned. Remember what you understand about monetary history and finance and economics, and don't allow those voices to affect you. Stand strong. Everybody watching this channel is in the right place. Don't worry about your place. Remember what you're taught. Keep coming back to the channel. Keep going over the content. Stay strong. You'll get through it. I think people that are in gold and silver are going to get through it in much better shape than others that don't have it, unfortunately.
Well, Rob, thank you so much for your time, and God bless.
Thank you, Elijah.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.